Hey guys, welcome back to the channel for another video. Today I just wanted to talk about the markets as a whole. It's a pretty horrible Monday out there today. Nasdaq's down over 3% as I am filming this video. S&P, Russell 2000 are also well down. The VIX is way up. It's looking like it's going to be a horrible day and potentially a horrible week out there, driven by higher CPI numbers, higher inflation, your war in Ukraine just dragging on, not looking like there's any end in sight. Just really no good news at all today. And I wanted to really hear what you guys think. Are you buying, taking this opportunity to add, or do you think it's going to go down further? Are you going to hold off and stay in cash or even short the market, as I know some people have been doing? Chicken Genius is a big one. He's a guy I have a lot of respect for. He's actually short the markets right now, which is not something I would ever do, but some people definitely are, and they don't think this is the bottom. Others are saying this seems like it could be peak fear, and this could very well be the bottom. So I just wanted to show a few points of data and really just discuss how we're handling these turbulent and painful times in the markets. So let's go ahead and jump into it. So yeah, as we're looking at the markets today, this is what we have right now. Dow Jones down over 2%, S&P down over 2.5%, Nasdaq down over 3%, Russell 2000 down almost 3.5%. VIX, the volatility index, so I know this looks green, doesn't mean it's good. It means we're looking at more volatility, up over 17%, and it's not only confined to stocks. Bitcoin, Ethereum, all of crypto really is getting absolutely crushed today as well. Ethereum down almost 15%, Bitcoin down 13%, and we have some, big exchanges like Binance pausing Bitcoin withdrawals due to issues with they're having, as well as other big exchanges pausing withdrawals, which can definitely send customers into a panic. Like, what do you mean I can't get my money out if I want to? Which could even encourage people to try and get their money out even more if they think there's a problem with the system. So not a lot of good news anywhere today. A lot of this was driven by last week's CPI numbers, inflation numbers coming in a lot hotter than expected, which is bad news for everyone. I think we all see it when we're buying gas out there, buying groceries, buying basically anything. Prices are a lot higher than they used to be, and they are definitely outpacing wage growth. So not good for any of us. And I want to make it clear in this video, I'm just kind of talking to you guys. I'm not really trying to push a certain course of action. I will tell you what I'm kind of doing, but really interested to hear what you want to do and just have a discussion, not say I'm 100% right on this and this is what everyone should do by any means. So continuing on, as we talked about, consumer price index rose 8.6% in May from a year ago. This is the highest increase since 1981. So that's over 30 years, a really long time, obviously. Bad news. Core inflation, which excludes food and energy, rose 6%. So not quite as bad if you exclude those two items, which a lot of people think are impacted by the war in Ukraine, but still really bad. Fuel is up 106% over the past year, which is extremely painful, especially if you have to drive a lot. It's crazy for me. I know I'm trying to avoid driving a lot compared to what I used to do, for sure. And I imagine a lot of people out there are the same. Although sometimes, if you have to drive, you have to drive. There's not really a way around it for a lot of people. Shelter costs rose at the fastest 12-month pace in 31 years as well. And the rise in inflation meant workers lost more ground in May, with real wages declining 0.6% from April and 3% on a 12-month basis. So obviously wages go up as well as the prices of things, but wages are not going up nearly as fast as these prices meaning inflation is kind of running rampant right now. This is leading to a lot of speculation that the Fed, even though they've said they'll only raise interest rates by 50 basis points, they may have to do 75 or 100, causing a lot of fears in growth stocks and the market in general. Of course, the war in Ukraine seems like there's no end in sight. This really contributes to the food shortage issue, the increase in oil prices coming out of all these bans of Russian oil, and just generally unrest and unease at a geopolitical level is never good for the markets either. So right now, obviously, the big conflict is in the city of Severodonetsk. Of course, I'm going to mangle that name. Over in the east of Ukraine, and so the Russian army, with the support of artillery, has had partial success in pushing back Ukrainian units from the city centers, and hostilities are continuing. So not looking like this war is going to come to a close anytime soon, unfortunately. So no help there. And then a lot of people today talking about, okay, well, is this the bottom? They feel like when you have peak bad news, peak panic selling, that's generally when you hit the bottom. And we're seeing, bad news everywhere, fear running rampant, as we just spoke about all those various issues. So a lot of people are calling this the bottom actually out there today. I'm not really ready to say one way or another. My philosophy is, it's hard enough just to pick good companies to own. Trying to time the macro markets is just not for me. I mean, it's so hard. It's impossible really to call the bottom. It's a fool's game in my opinion. So I think just own good companies. The markets will have these rough periods. They'll have really great periods. Overall, you'll do well if you just hold and own good companies. So that's what I'm trying to do here. I would like to add a bit more Tesla, a bit more Rocket Lab at these prices, maybe Airbnb. It's another one. Unfortunately, I don't have too much free cash right now, so I'm mostly just holding. I might rotate out of some of the more stabler ETFs and add a little bit more of those companies, but I do want to make sure that I maintain kind of safe levels in my portfolio and I'm not overly exposed to these more volatile names. So that's kind of what I'm doing, mostly holding, not selling for sure, not panic selling at these levels. I think that would probably be the biggest mistake, because then you got to figure out exactly when to get back in. Or maybe you see a little bounce and think, okay, well, this is just a bear market rally, we're going to go back down, and then it doesn't. It keeps going up, and the next thing you know, you've missed the opportunity to buy back in, and it's higher than when you sold. These bounce backs can happen extremely fast when you see like a little V in the market and it just shoots straight up. Not worth trying to time that, in my opinion. Of course, you guys are welcome to do whatever you want out there, as I said. So when you're looking at these times in the market, you think, okay, maybe there'll be some big earnings this week that will really beat expectations and kind of improve the sentiment in the market and, make people feel better about these companies. So I was just checking out the earnings calendar for this week. Obviously 99 companies reporting today, but not a lot of big ones really stood out to me. I will be somewhat interested in Oracle. They had a good quarter last quarter as well, so if they can do well this quarter, might be a bit of a good sign. Adobe's another one I'd like to watch on Thursday. Maybe if they blow it out, it'll help. But these aren't really the biggest of the big mega cap names that could really move the market if they had good earnings. And, names like Google, Microsoft, Amazon, those kind of companies where if they have like a really big beat, that can affect the entire market sentiment. And we just don't really have that this week, so I don't see that going for us to have a quick turnaround. That said, these markets are so crazy lately. I mean, wouldn't it shock me to have a giant jump for no reason that I can figure out? Another reason why I don't try to play these macro markets over the short term, I just buy and hold. That being said, some people I respect are thinking the drop will continue. They are trying to stay more in cash. So it's really up to everyone, your own opinion on these markets, what you want to do. Definitely depressing for everyone out there right now, though, myself included. It's never fun to see your balances drop like this. Anyone using margin, be extremely careful right now. I'm not making any margin trades right now just because I think the overall markets are a little too volatile to feel comfortable making any more trades, unless perhaps it's a covered call. But even then, we're down so far, it's a little painful to write covered calls. So I'm mostly just holding, and if I do get any free money, maybe adding to a couple of the names that I really like. And over the long term, we should do fine. Yeah, so that's pretty much it for today. That's what I'm seeing out there. Could be a rough week. We'll have to wait and see. So, as I said, a bit of an odd episode today, really just a kind of discussion video talking about how we're feeling with these markets, what's happening in the news, driving it, not really an analysis of any company. I just wanted to go on and talk a little bit about what I'm doing, recommend not panic selling. Although that being said, some people are trying to stay in cash, so I don't claim to be the expert. And I really wanted to hear from you guys what you're doing, how you're feeling today. Are you handling these down markets okay? And what are you doing with your portfolios? So thanks for tuning in once again, and I'll talk to you in the comments. See you next time. Bye.